In this lesson, I'll be discussing a vital tool that I use in my own trading. It is the Fibonacci Retracement tool. Now, with the Fibonacci Retracement tool, it is a big topic, and I'm not going to go into everything into detail. I'll have a YouTube channel with a YouTube video that will specify or go into detail with the Fibonacci retracement. So I just want to briefly explain what it is and how you plot it and whatever. But like I said, in the paid course, that's where I'll show you how I plotted, what levels I use, and everything, how to implement candlesticks with the Fibonacci, how to implement trend lines with the Fibonacci, how to implement support and resistance with the Fibonacci. Everything is in that course. So this is just the basics of Fibonacci retracement. So like I said, I use it 98% of the time, if not 100% of the time when I trade. So you need to learn it, love it. So like I said, I'm going to have the own sort of a video on it. Quick history, okay. I'm not going to go into all the mathematical thing. Just know that, there was a guy named Leonardo Fibonacci, okay. He was an Italian mathematician, and he discovered this series of numbers, okay, which created ratios describing the natural proportion of things in the universe, okay. Like I said, I'm going to explain all of that into detail, how you come up with it, and if you divide this and that, it will give you a Fibonacci ratio. Okay, that's all the math. We don't need to know the math, right? We just here to trade. So you don't, like I said, you don't really need to know it. But for those who are interested in learning on, where does it come from and that, there will be the video. But it's not going to happen in this video. So it's basically horizontal lines that you put on your chart that will indicate sort of like hidden support and resistance levels where price will retrace to and then continue. Okay, so keep in mind Fibonacci retracement tool works better if the market is trending. Okay, so if in an uptrend, you're using the Fibonacci tool. So this is basically how it looks. So you'll take it from one point. Okay, this is an uptrend. You'll take it from the bottom point, from your higher low, up until your higher high. And then that recent retracement, that's what you're trying to find out when is it gonna, make that, is it gonna make a higher low, and then what area is it gonna make that higher low so that you can trade it. So, uptrend forms higher highs and higher lows. Now, remember, swing point. Once you have now identified these swing points, okay, in the uptrend, the higher highs and higher lows, in order to now identify, where the next swing point will now get to and then continue, reverse back up in an uptrend, you can put your Fibonacci tool. Now you need to put it, like I said, from the swing low to the swing high. So from your higher low to your higher high to identify the next higher low. It's pretty simple. You click on the Fibonacci, you take it from your low point and you drag it to your other point, shift it to the side, and you got it. Right, I'll show you now. So like I said, in this example, as you can see, price retraced to the 78.60%, and it started, inclining. I'm going to explain all of that. Okay, as you can see, it continued going up. So if you bought at the 78.6% at that new higher low, you would have profited. Right, in a downtrend, it's complete opposite. So now you're going to start from the swing high, and you're going to drag your Fibonacci tool to the swing low. So, lower lows, lower highs. You're going to drag it from the lower high to the lower low, and you're going to identify the next lower high with your Fibonacci so that you can sell. Okay, as you can see there, from that lower high to that lower low, price now rejected the 61.8%. That's forming your lower high, and that's where you would have entered your sell position. Right, I'm going too fast. Okay, now keep in mind it's not 100%, because remember there's different levels. It's not foolproof, and you know, it's just like any other tool. Trend line, it's not 100%. Support and resistance, not 100%. Market structure, even not 100%. Indicators like your SMAs, EMAs, MACDs, RSIs, not 100%. So here is an example that it's not sort of 100%. So as you can see, higher highs, higher lows. Okay, looks like price is forming the next high low. You put your Fibonacci, 78.6%, making a tweezer bottom candlestick. Put your stop loss, put your take profit, you enter. Now, I'm going to show you that, you know, it doesn't work all the time. As you can see, price crashed down. Hit your stop loss, you lost that trade. So remember, it's not always 100%, just like anything else, but it helps. So the lesson here is that, yes, Fibonacci gives you a high probability of success. You know, trend lines do it too, support and resistance does it too, but they don't always work. They work majority of the time. And it also depends on if you put in it correctly. Okay. And I mean, like it says here, price might reverse instead of giving a retracement. So it looks like it's a retracement, but then it goes past 100%. You've entered too early, and boom, you stopped down. All right, now I'm going to show you the Fibonacci. Now, once you get onto tradingview.com, it's going to kind of look like this, which is horrible. I don't like that at all. So we're going to do some changes. Now, I don't like the filling of the color. I mean, if you don't like the colors itself, you can change everything. I don't like this line here. So what you're going to do is, so your tool is here. So not the first, not the second, the third one. You'll see there's your Fibonacci over there. All right, so you're going to click on it, and then you got it. So let me just do that over. So once you find your Fibonacci, you click on it. Then you can click, hold, drag. You can drag it around. All right, so what you want to do is you want to go to settings. So I don't want the trend line, that's this gray dashed line. I don't want that, so I'm going to take that off. Then what I'm going to do is, I don't use the 4.236. Okay, this is not, this is a standard one that I'm going to show you. It's not the one that I personally use, but some of the levels that I'm going to put on here, certain levels is what I use. And then there are extra levels that I add on that I use. But for general, it's going to be fine. You take these off, take that off. I don't want the color, so what I'm going to do is background. You scroll down, go to background, take that off. So I like that. Okay, and then I want percentage, not level. Okay, and then labels, I want it on the right, like that. So what I'm going to do is the 0% and the 100%, I want it black. Okay, look, we don't use 23% at all, so I'm going to take that off. So potential levels are the 38.2, the 50%, 61.8%, and the 78.6%. So I'm going to, you know, we can leave them as is, or let's make them each a different color. So red, that can be green, that can be blue, and that can be purple, whatever, right? And all of that is right. Okay, awesome. Click OK. Now, if you want to save the settings, you can go back to settings, and then go template, and then save as template, and then you name it. So then if you lose it or whatever, you can just go to template and then it'll be here. As you can see, I have 3 different types. Alright, so it'll look something along the lines of this. So like I said, price, let's have a look at Fibonacci in an uptrend. Fibonacci in an uptrend. Now, I'm going to use an arrow. So, price makes a higher high, higher low, higher high, higher low, higher high, and now let's say it's coming here. So you can see there's a rejection. Okay, you can see there's a rejection. Let me name these. So higher high, higher high, higher high, higher low, higher low. So what you are going to do, once you identify that, you remember it's in an uptrend now. Uptrend. Once price starts rejecting and there's a clear peak, there's a clear pivot point, you're going to take your Fibonacci tool. You can find it over here. Sorry, this toolbar, I show you how to do it in the paid course, but you can find it easily on here. What you're going to do, you're going to take the recent high low, and you're going to take the fib from that high low to the recent higher high to get the next retracement. So you're going to drag it from there, hold it in, you drag it to the top, to that higher high, so that the 100% is on the high low and the 0% is on the higher high, and you drag it to the side so it's bigger, because you don't want it to look like that. So just for nice space, and there's your Fibonacci. So price can either come down to the 38.2%, and then you can potentially buy on this higher low. I'm going to explain the differences now. So it can potentially do that, or can potentially go to the 50%, and then you can buy there if it rejects there, or it can go to the 61%, you can buy there, okay, or the 78.6%, and you can buy there. Can you see that it's either one makes a higher low? Okay, so then that's where you'd like to buy, and then if it goes up to form the higher high, then you've profited. Okay. However, if the price goes beyond the 100%, that's an equal low. Remember from market structure, equal low. Okay. So there's a possibility that price might reverse to a downtrend, or it might even just go from that high past the 38, past the 50, past the 61, past the 78.6, past the 100%, and it makes a lower low. That means that upward move is invalid, lower low, because now what's going to happen is price is going to retrace this higher low, so it will retrace back to this level. So now you swap it. Now it's a potential sell. So you take your Fibonacci now from the higher high, drag it to the higher low, so that the 100% is now on the higher high, 0% is on the lower low. Okay, this is a 23.2%. I don't trade it. Okay, to be honest, I don't even trade the 38.2, but most people do. But you know, it can potentially reverse there. Or if you have extra confirmations which you need, like your trend line, if I were to put my trend line like that, can you see it will always retrace the trend line? Not always, but okay, better confirmation, the 61 and that trend line. So I'd look to sell over here because there's a possibility that the lower high will form here, because there's two confirmations. It's the 61.8% and the trend line break and retest. So then you would look to sell there and hopefully profit. So let me show you in a downtrend. Okay, I just added on to that. So downtrend, lower low, lower high, lower low, lower high, lower low, and now you see coming up like that. So now you got your low low, 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 lower high. Whoopsie. Lower high. So now we need to look where is price going to retrace and form the new lower high. Is it going to form a lower high, or is it going to go above and form a higher high and change to an uptrend? So in a downtrend, you're going to take it from the lower high, the recent high, to the recent low. So you look for your Fibonacci there, take it from the lower high, drag it to the lower low. So now price can either come to the 38 and then form the lower high here and then you sell, or come to the 50, come to the 61, come to the 78.6. They all still make a lower high. I mean, if you put a trend line from this point of view, like there, okay, it looks like the 61 again, 61% this side. So I'd look to sell at that price, 1.16211, and then sell from there, depending, because then it's the trend line, it's 61.8%, it's the market structure. Wait for a candlestick confirmation, maybe a bearish engulfing, then I sell. Evening star, sell. So that is how you plot it on there. I'm going to show you on the chart. All right, so let's have a look at this now. So let's say we see this and we see price. So let's do the thing. Okay, so high, 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 low, boom, boom, lower, low, lower, high. So I'm going to start from here because this is where the downtrend has started. Okay, so I'm going to do it like I said. I'm going to use the arrow from that high point to that low point, from that low point to that high point, to that low point, to that high point. Let's just take this into consideration. There, 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 there. Okay, boom, hide this. So, lower low. Okay, I'm just going to do it. This. Okay, lower high. So it's just easier for me, but if you're a beginner with this, make sure you start with lower low, then you do the lower high, then you do the lower low, then you do the lower high. This is actually equal high. Equal high. Okay, so now you can see this price pushed above this level. So formed a higher high. So now we're in the business of changing from a downtrend into an uptrend. But let's have a look. Okay, and we can do things like this, trend line. So we need to wait for a retracement. So let's see. So I'm just going to fast forward. Okay, as you can see, we're getting the rejection. There's the rejection. Just put this there. So, because it's now in a potential uptrend, we're going to take the Fibonacci tool from the lower low, can you see, of that wick, to that higher high, that wick on top. Drag it. So now, price can either come to the 38.2, go up, or 50% go up, 61 go up, 78 go up. Let's see where it goes. Okay, 38. Let's see. Okay, 38 invalid. Ooh, rejected the 61. Let's see. Consolidating. Testing the 61 for the second time. If we look left, look at this area. Okay, so we might enter on the 61. Let's wait for a candlestick confirmation. Shooting star. So would we buy there? Yes. Once the shooting star closes. Because look, rejected the 61 for there's the first time this week, rejected second time, rejected third time, and it's a shooting star. So once this candlestick closes, we buying. We buying. Okay, take profit, like first take profit can be here, this level. Second take profit can be, let's say, here. Okay, doesn't matter. We'll get into that. But can you see? That's how you implement the Fibonacci. Alongside a market structure, alongside your trend line, alongside everything, candlestick. So all of this you need to put together. And then the more confirmation you have, the better, the higher probability that the price will go that direction. So that is, you know, from downtrend into an uptrend using Fibonacci. Sorry. So that is Fibonacci in an uptrend. Because remember, this downtrend has already happened. We had the high, we were trying to look where this high low would be, which was there. So now that is a higher low. So now what we need to do is we need to wait for price to retest somewhere. So let's just remove this. So now price started rejecting. So here's your higher high. So now you take your Fibonacci from that higher low to that higher high. And now we wait. Okay, it's on the 23.2%. Looks like it's testing the 23.2%, yeah. Let me just prove that it tests that. See, tested it once, tested it twice, third time. Tweeze the bottom, could have bought, but I don't trade on this. Could have bought again, and boom. So that's Fibonacci in an uptrend. All right, for the Fibonacci in a downtrend, right? So I'm going to identify this uptrend here. Let's just start off here. So it makes a higher high, higher low, higher high, higher low, makes an equal high, equal low. So price pushes, 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 lower low. Well, let's see. Let's see where this lower low leads to. Okay, that last point over there. Okay, so let me do this. So would be higher high, sorry, higher high, higher low, then it would form another higher high, another higher low, then equal high. Okay, potential double top. Price breaks below this high low, so form the lower low, indicating a downward move. Okay, so now indicating a downward move, let me just remove these, put this back on. So we need to identify where is this going to retrace to before we can enter a sell. So we take our Fibonacci from the top to the bottom, drag it. So is it going to go 38, 50, 61, 78? Let's find out. Okay, reach the 38, rejected, rejected. Oh, push to the 61. Made an inside bar. This candle's within the previous candle. Rejected this 61.8%. And if you look left, there's sort of a resistance here. Like that. So I would sell over there to go down. To form, don't know where it's going to, lower low. Okay, good so far. Oh, boom. Oh, that was perfect. Oh, further down, never mind. Right, so you would have profited all of this here. This was put in market structure, support and resistance, and the Fibonacci together. So now imagine putting Fibonacci, market structure, support and resistance, trend lines, all of these together, so it is more accurate. So that is how you plot the Fibonacci in an uptrend and a downtrend.